Yet again, another IPO hits the market, this one being Kross Limited. In this video, we will cover the business overview, IPO details, the market opportunity, followed by the financials, the peer analysis, and lastly the valuation. To start off, Kross Limited is a diversified player focused on manufacturing and supplying trailer axle and suspension assembly and a wide range of high-performance forged and precision machine safety critical parts. The company's product portfolio includes high-precision components like axle shaft, hydraulic parts, transmission parts, suspension parts, crank levers, spindles, and a whole lot of other components. It supplies products to major OEMs that manufacture medium and heavy commercial vehicles like tractors, trucks, trailers, and additionally to farm equipment segments. A few of the prominent clients are Eicher Motors, Tata Motors, Ashok Leyland, Sonalika, York Transport, to name a few. And as of June 2024, the company has 5 ISO certified manufacturing facilities and over 528 permanent employees. Now moving on to the IPO details. Kross Limited opens for subscription on September 9th up until September 11th and is set to list on both the BSE as well as NSE. It has fixed the upper price band at 240 rupees per share. So for a retail investor, the minimum lot size would be 62 shares, translating to a minimum investment of 14,880 rupees. Kross plans to raise 500 crores, out of which 50% is towards a fresh issue of 250 crores, while the remaining is an offer for sale, which means the existing promoters and shareholders are selling off shares. The IPO has reserved about 35% for retail investors. So what are the objectives of the issue? Kross plans to use the net proceeds from that fresh issue to achieve a couple of key objectives. Firstly, to fund the capital expenditure requirements of the company towards purchase of machinery and equipment. Second is for repayment or prepayment of certain outstanding loans of the company from banks and financial institutions. Third is to fund the working capital requirements and for general corporate purposes. Now, what about market opportunity and the future trend of the industry? The Indian trailer axle and suspension assembly market is a crucial component of the country's transportation infrastructure. It's directly linked to the growth of the commercial vehicle industry. However, in fiscal year 2024, the medium and heavy commercial vehicle segment exhibited a degrowth of 3% over the previous year. But the resurgence in economic activities across various sectors played a pivotal role in driving this recovery. Tractors, trailers were the fastest growing category in the MHCV segment, witnessing a growth of 71% CAGR between fiscals 2021 and 2024, followed by the MCV, haulage and MAV. Haulage segments at 50% CAGR and 32% CAGR respectively. Now coming to the financials of Kross. Kross has shown strong financial growth over the past few years. Revenue increased to 6,202.5 million in fiscal year 24, reflecting a CAGR of 44%. But the year-over-year growth slowed to 26.9% in fiscal year 24 after 2 years of over 60% growth. On the profitability front, the company's profit after tax grew from rupees 121.69 million in fiscal year 22 to rupees 448.81 million in fiscal year 24, representing an impressive 92% CAGR. The PAT margin increased from 4.09% to 7.22% with a 3-year average of 5.88%. Kross also saw improvement in its return on equity and return on capital employed ratios. Return on equity jumped from 16.81% to 30.57%, and while ROCE increased from 14.97% to 28.15%. In terms of financial structure, the company reduced its debt to total net worth ratio from 1.19 times in fiscal year 22 to 0.8 times in fiscal year 24. Now moving on to peer comparison and valuation. Among listed peers, Kross is one of the smallest players in terms of revenue, but its return on net worth is the highest. In terms of valuation, with an upper price band of ₹240 per share, the price to earning ratio stands at 28.9 times, while the industry average stands at 24.85 times. So as per the industry average, Kross is reasonably priced. Now coming to our last segment, which is strength and weaknesses. Let's start with the strengths first. Kross Limited has established a solid presence in the Indian trailer, axle and suspension assembly market. However, it has a long-standing relationship with large OEMs complemented by a diversified network of dealers. As mentioned earlier, its prominent clients are Tata Motors, Eicher Motors, Ashok Leyland, Sonalika, to name a few. Next, Kross has established a track of consistent revenue growth and profitability. The table below sets forth some of the key financial information and ratios for the fiscals 2024, 2023 and 2022. Kross offers a variety of products catering to different customer segments and vehicle types. This diversification helps the company mitigate risks and capture growth opportunities in various market segments. Next, the company's manufacturing facilities are equipped with modern technology and experienced workforce. Their manufacturing units have been operating over 68% utilization for each of the fiscals 2024, 2023 and 2022. Furthermore, the net proceeds from this IPO will go towards purchase of latest machinery and equipment. Now coming on to the weaknesses. Kross derives a significant amount of more than 66% in revenue from its top 5 customers. The loss of a major customer or reduction in any demand from any of these products from the major customers may adversely affect their business, financial condition and result of operations. Next is the demand for Kross's products is linked to the growth and trends in sales of vehicles by their customers. So decline in sales of its customers may adversely affect the demand for its products, which in turn would adversely impact their business and financial condition. Next, the trailer axle and suspension assembly market is competitive with both domestic and international players vying for a market share. Kross faces stiff competition from established players and new entrants. Lastly, the company is sensitive to fluctuations in the raw material prices such as steel and aluminum. So any change in the availability and cost of steel, aluminum, etc. may adversely affect their business financial condition. The image on the screen shows the cost of raw materials consumed as a percentage of revenue and the cost of steel sourced from suppliers as a percentage of materials consumed. Therefore, rising costs can impact the company's profitability. Now that you have a comprehensive understanding of the company, make an informed decision. Having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.